Hi, everyone. I'm Ivan Bayuki, and welcome back to Wall Street Silver. Our guest today is Gareth Soloway, Chief Market Strategist at the InTheMoneyStocks.com. Gareth, it's great to see you again.
Oh, thanks for having me back. Always a pleasure.
Yeah, absolute pleasure. You said back in December, gold will be the best performer in 2022, and so far it's held its ground compared to like tech stocks. So, what's your precious metals predictions going into 2023?
Yeah, so I do think that it'll continue to be the best performer, and we're seeing such weakness in the Nasdaq and the equity markets, and really in cryptocurrency as well. So it does look like it's on pace for that, and I think it's going to continue. I honestly think it will be the best performer again in 2023. Although I think in 2023 you likely see Bitcoin bottom out. And then that's the question, right? Bitcoin has a history of such major moves. I mean, off of lows, Bitcoin could easily go up significantly. So I think I still am in the camp that 2023 gold is the best performer, but it starts to get a little trickier mid to late year.
Now, looking at the Fed's actions for the rest of the year, like what's your best case and worst case scenario?
Wow. So the Fed is definitely on pace for hiking here. I mean, we're talking 50 basis points next meeting, which is next month. After that, there might even be another 50 basis
You,
point
you think they'll
hike.
do it? You think they'll actually do it?
Uh, I'm in the camp, yes, as of now. I think if the markets between now and then sell off another 20%, then they may back it off to just 25 basis points. I think one of the issues that they have is credibility, right? So if they all of a sudden see the market declining and they step back to one or no rate hikes, then I think they lose even more credibility. And I think their credibility is already shot, considering they kept on telling us transitory for months and months and months when everyone out there could see that it wasn't going to be that. So I think that for the most part, they're going to try to stay the course, but I do think there will be a breaking point, a max pain point where the markets do so much and the economy maybe starts to stutter where they will start to back off.
We in previous cycles, it seems like progressively every down cycle, when they start raising rates, something breaks, and then they flip back to easy money. And last time in 2018, they could only raise rates up to 2.25% at the Fed funds rate before all the wheels came off. That was the paint drying. They're going to set off the balance sheet, all that. Do you think I mean, each time they've done it, the peak and what they could raise rates to has gotten progressively lower. Do you think we get it up to 2% and it just breaks again, or is it some level below that? I mean, so much more debt now.
Yeah, so I'm in the camp with what you're saying, where that we've seen every cycle that they can never quite get rates back to the previous highs, and you see this very clear downsloping channel. Now we do have the 10-year already north of 3%, so that's even taking out recent highs going back to 2000, I think 2018 highs. So there is something going on here, and the difference maker is the inflation, right? We're seeing 8.5% inflation, which we haven't seen that type of inflation in a really, really long time. So this is going to be a big test for the Fed. It's going to test their staying power, which is, with a high inflation, how do they lower interest rates and make easy money policy come back if inflation is still, let's say, over 5% or even over 4%? Because then the next time, what's it going to push inflation to? I mean, if let's just say we're topping out at inflation at 8 to 10%, maybe the next time now it's 12% or 15%. And you just have this really slippery slope that could get very, very scary for the average American out there, and really for the global citizens, as most central banks are following suit.
Right. We have Powell that just joined us, so you can ask him what he's raising if he's going to raise 50 basis
Nice.
points.
I love how he's hiding behind all the silver, though.
Yeah.
Now, in your opinion, Gareth, could this be potentially the nastiest storms we've seen in the markets? Like, what's your prediction for the NASDAQ? Another 20-30% drop?
Yeah, so I think we're down about 25% now. I do think before year end, we probably are down as much as another 20%. Going into 2023, it could get even worse than that. Because again, it comes down to, if we look back at like 2018, as soon as the market dropped 20%, they backed off from hiking rates, and then they actually went to printing again. And so with the Fed's inability to do that because of high inflation, the question is, how do they get us out of the next issue? And I think that's the big question that makes me very nervous about the economy as well as the stock market. And let's be honest, the stock market really is the economy now. You have so many people in the world investing and having their 401ks and their pensions all tied up into it, that I think just alone, you drop the markets by 25, 30, 35, 40%, you'll create a recession just by that aspect, where people in 2020 and 2021, they had this wealth effect. They saw their 401ks going up so much. They're like, oh, let me go spend money, do whatever I want to do. Well, it's going to be the reverse situation where all of a sudden they feel a lot poorer because they had all this money and now it's evaporating.
Mm-hmm. Do you believe the stimulus checks will help though?
You mean the next round that they send out?
Well, that's a good point. A lot of people are speculating that's what the Democrats' next move right before the midterms is more stimmy. If things really start going south, hey, stimmy checks right before the election, right?
Yeah, I mean, anything is possible. But again, I think that you have a scenario here where the average American, the middle class, the lower income Americans, they're really struggling with prices. And I think the Democrats have to really show if they want to even maintain, the leadership and control of the Senate and the House. They have to show that they are strong in terms of fighting inflation, because Americans are fed up with inflation. And I'm sure citizens all over the world seeing the prices go up like this. I mean, that is not working for people. I mean, who cares if you get $1,000 stimulus check if every month you're paying $2,000 because of the higher prices, right?
Yeah.
Right. So Powell, he came out this week and he said we'll have a softish landing, Gareth, and he said it's due to the jobs market being strong. How insane is that in your opinion?
Yeah, I mean, it's ridiculous. I mean, and so yes, the jobs market will help, right? But when you have the equity markets declining like this, risk assets declining like this, the Fed hike. I mean, remember, the Fed's not just hiking rates. They took away all the QE. Now they're hiking rates and they're reducing their balance sheet. So it's almost like a three-pronged attack where they're raising rates, or at least making monetary policy a lot harsher. So I think that for the most part, yes, it's going to cushion it in the near term, but my forecasts are all telling me that inflation is not even close going back to 2% over the next couple of years. And so at that point, it just puts them in a position of, well, what are you going to do when you have this next downturn? And by the way, downturns are inevitable, right? You can, right. The Fed is like a doctor or a drug dealer where they keep on injecting the patient with more drugs, right? And it's like, all right, let me keep them alive. So let me inject them with more and more. Patient eventually flatlines, right? And then you kill the patient anyways, and you have to have a reset of the system. And I really do believe that that's what we're approaching now. Now, that's going to take years to happen, right? I mean, the Fed still has the ability to, let's lower rates a little bit. Let's stimulate. Let's do this. Inflation, okay, it's getting worse. But there will be a breaking point probably in the next 5 to 10 years where the whole system just comes crumbling down. And that's kind of the worst. I mean, that's where no one wants to see that, because it's like Great Depression type stuff.
But it's like there's almost, at some point, there's no, I mean, we're approaching 140% debt to GDP in the United States. No. There's just no coming back from that, right? Once you get beyond 100, it's pretty much all 100%. It's all downhill.
Yeah,
we're headed to Greece type, debt crisis scenarios. And Greece is obviously small. We can deal with that, but you start having major EU countries in the United States having a debt crisis. Right. Holy shit!
Yeah. And I agree. It's something that can't be remedied at this point. I feel like we've kind of made our bed and we have to all lay in it at this point. And that means that there's going to have to be some sort of reset. And I don't know what'll end up happening. I mean, I've speculated and thought about, well, could there be a massive debt forgiveness globally? Because it gets if you have this global Great Depression type scenario where it's so much worse than 2009, do we just start over? Do we then come out with a digitalized currency that has restrictions on it that can only expand at a regulated amount that no one like the Fed has control over? It's stated pre-currency. I also think that eventually we're going to get in a situation where the people of the world will demand that governments have balanced budgets. I mean, it's ludicrous to think that we can just continue to borrow money endlessly and there's no. I mean, you guys heard about this modern monetary theory, right?
Yeah.
I mean, over the last 3 years, all these politicians were like, oh yeah, this. And I mean, it's the stupidest thing in the world to think that, I mean, if we ran our households like the government, we would have been cut off long ago from our credit cards. And eventually people want to get paid back, or countries want to get paid back. So, I mean, it is nuts to the way things have been run, and there has to be a reset.
Well, you just said, maybe a global debt jubilee, but hey, someone owns all that debt too. Someone's on the receiving end of those interest payments and principal payments.
That's right.
So someone's going to get screwed here. There's no, hey, we'll just, they talk about the student debt forgiveness, but guess what? That's an asset for the government that actually brings in revenue.
Right. And it's taxpayer money, essentially. Yeah.
Yeah. So it's not free money. It's like there are consequences to this stuff.
Yeah, and I think it's important that everyone who is like, oh well, who cares? I mean, and listen, people are finally this year starting to say, okay, we actually care about debt, but I mean, there was no politicians, and there used to be like the Tea Party back in the day that was like against overspending, but that all vanished, right? Whichever powers in players in power, they're all like print, let's make ourselves look the best. But the bottom line is, there is a point where you end up blowing up the system. You cannot just create money out of thin air forever.
Yeah.
Gareth, we're excited to see your charts. As much as we love your monitors in the back, we'd love to see the charts.
Yeah, absolutely. So we are seeing the market selling off again today. This is the QQQ chart. So you can see we're just off of the lows here on the Qs. And I'm keeping an eye on a couple levels. This one right here, there's a pivot high going back to September of 2020, and that's right around 305. It looks like we kissed that at the lows today. The bigger level to me is this one right here, which is just below the even number of 300. So I wouldn't be surprised if as early as Monday we hit the 300 and pierce it, considering we're only $7 away. I do think you'll get a technical bounce there, but I do caution people. It's not like the bottom's in by any stretch. If you go to a zoomed out chart here, you can see very clearly that there's a longer term trend in the markets that, you can basically connect these highs. And we have to kind of come back and revisit this area down here. I think, again, my guess is this is where we're going to head, is to kind of this pre-COVID high level. And that'll be when the monetary, stimulus has fully been washed out of the system, when we finally get back right here. So you can see there's still a lot. I mean, there were still $70 away from that area on the QQQ, which is a whole heck of a lot in terms of the NASDAQ 100. So I think if you're in this market, you got to think I'm either a trader or I'm sitting on the sidelines. It's one or the other, right? Because if you're buying here to think that you're the genius that's going to pick up the low, I honestly think you're going 25 plus more percent to the downside.
And Gareth, how will this affect precious metals? Like if it hits that mark you were saying, goes down 20-30%?
Yeah, I think so. I'm in the camp that you're going to start to see metals become the recipient of money exiting as money starts to find out that buy the dip does not work anymore, and that every time the dip is bought and they're trying to hold for big moves, they're getting crushed because it goes lower and lower. I think that the recipient is going to be gold. Like if you look at this gold chart, this is actually a really bullish chart. There are not many bullish charts out there, but gold is certainly that. You had this big move up from 2018 to 2020, then all this consolidation for almost 2 years. You just recently broke out. You went to a classic double top right here, and now you've retraced. But this is gearing up for the next move up on gold. And I think it's going to take us, again, and I think 2,400 by year end is a very easy target on gold to get to.
Well, now we got to ask you silver, man. It's Wall Street silver. So
absolutely. I figured as much.
That's right.
You better be ready with the silver chart, and it better be good.
So to be clear, I am long silver right now. I have accumulated a position in SLV. The idea here is that
SLV?
SLV, the silver ETF.
Mm-hmm.
And basically what we've seen here is a very dramatic sell-off on silver. We've gotten through this trend line, but we're now sitting just on top of this area. So this is a short-term trade, just to be fair. I'm not looking for, holding it to $30 or $40 silver. But again, I do think that you're at a very good support here where you should see some sort of technical bounce. My guess is back to about $24.30, $24.25, this pivot low right here. So again, I am long silver. I think overall, if you're someone who has an eye out for 6, 12, 18 months out, again, very bullish longer term chart, beautiful bullish consolidation, right? So you have this move and then all this sideways consolidation. Anytime you have consolidation after a big move that's in the upper 50%. So if you look at from this low here to this high, this is basically 50%, give or take. Any consolidation that's in the upper range of that is actually very, very bullish. So again, I think that ultimately silver short term for me is a buy, and longer term, if you have that time horizon of 6, 12, 18 months, I think it's going to go higher as well.
Yeah.
Wow, that's exciting. That's what we want to hear. We want to hear it going up.
Otherwise, this video is going in the trash can. It'll never see
I figured as much.
I know you're a crypto guy. What's your outlook on Bitcoin right now?
Yeah, so let's take a look at Bitcoin because it's not looking pretty right now. So for the longest time, and I think last time I was on, I was talking about this with you guys, how we had this bigger macro bear flag, right? So big move down from 69,000 to this low, and then all this sideways chop. Notice again how you had this very clear trend line here, which was perfectly parallel to the tops. And look at what's happened in the last few days. You've now started to break down. So Bitcoin is following exactly what the chart said it was going to do. It's a risk asset, which means if I'm telling you guys that I believe the NASDAQ's going lower, then Bitcoin honestly is going to go lower as well. You'll have a stopping point at around 33,000 for a small bounce, which was the low from 2022 right here. Then you're going to go test the 2021 lows, which were around 29,000. But I think it's going to, after bounces at these levels, I see it going lower. So ultimately, I've said it since last October, November, when it was at 65 to 69,000. I said, you will revisit 20,000. And I still think it's headed there. So I am not a bull in the near term. Long term, I do like Bitcoin, but near term, not at all.
I've seen a lot of people speculate. People have tried to figure out what is Bitcoin connected to in the real world, and the closest parallel is it's a proxy for the NASDAQ. It's like a NASDAQ on steroids.
It is.
It's not a risk. It's not. The Bitcoiners like to connect it to gold, as it's gold's old, gold's out of favor. Bitcoin's the new gold, but no, Bitcoin's just NASDAQ on steroids.
Yeah, it totally is. And I think the best way to think about Bitcoin, and by the way, eventually I do think Bitcoin behaves more like a gold, but you have to let it mature, right? So right now it started in 2009, it's 2022. So it's the equivalent of a 13-year-old, right? So ask yourself this, like how rational does a 13-year-old behave? And we know it does not behave. They do not behave rationally. So think about it like that. It's still kind of a very adolescent investment, which is going to behave erratically. It is following the NASDAQ, absolutely, risk on, risk off. And so you have to let it mature. If you're someone who likes it long term, then yeah, let it mature for another 5-10 years, and you might get into a situation where it's much more stable once the adoption becomes more thorough.
Yeah. Right. Well, hey, Gareth, it's always a pleasure to talk with you. You're a great resource for us on our channel, and you're definitely going to be having you back in the next 2 or 3 months.
Wonderful. I look forward to it, guys, and thanks so much for having me.